How's it going, everyone? Welcome back to Continues to Tick, a YouTube channel where I focus a lot on the systematic progression of time, or aka the future. Life is a long game. At least it's supposed to be, that is. But ask any elderly individual you see, and they'll be the first to tell you. Blink and before you know it, you'll be in the last stages of life, with no ability for redos or do-overs. With this said though, I hope you're all doing well, managing so far in what has been an interesting start of 2021. We continue to make progress on this YouTube channel, and the journey has been very fun so far, and I don't plan to stop anytime soon. So if you happen to enjoy this video, do like, as it does help. And if you're looking forward to any future content, please do subscribe, as this dividend series and the journey of this channel, like I say, it won't be stopping anytime soon. Like I was saying, I'm so interested in the idea of time passing that I created this channel to hopefully attract like-minded individuals that like to look and think of themselves years ahead. I'm a believer that in life we continually every day get one shot, and step after systematic step, or day after day, it all adds up. If I can see myself and where I want to be every day when I wake up, why can't I think to myself that I'll in the end get there? And a big part of that is planning financially for my future right now in my 20s. That's one of the reasons I started this dividend portfolio. I wanted to get into the future not needing to worry or think of my finances, primarily because I would have already thought about it when I was younger, which is now. In this series, I'm documenting the journey of systematically investing into a dividend portfolio with the end goal of buying back my time, be that a nice retirement or better yet an early retirement, and I plan for this portfolio to be a nice chunk of that financial success. Although investing for dividends is a slow process, in the game of life I like to play it safe, hitting base hit after base hit, rather than risk it all for the chance of a home run, especially when it comes to my money. Dividend payouts to me are these base hits, nothing fancy or sexy per se, but after a while, base hits run up the scoreboard. So with saying this, we finally did reach another big milestone for the portfolio this last week, finally hitting the anticipated $20,000 mark, and a bit sooner than I imagined it to be, if I had to be honest. The markets were rather green this last week, to say the least, and in addition, we also got paid quite a bit in dividends. So in honor of hitting the 20K mark, I will go more in depth than I usually would with my portfolio review this week, showing you exactly how much a 20K dividend portfolio makes me, what are my allocations set at, my current portfolio's yield, a recap of my current investing strategy, and an overview of my current financial situation, and so on. But before I dive into the portfolio review, this last week I had the chance to begin my scheduled 2-week vacation away from work, and was fortunate enough to spend this last week in Cabo San Lucas, Mexico. It was really nice to get away, and surprisingly, Mexico impressed me. They were really COVID cautious. I saw everybody wearing masks, and every restaurant we went to really went above and beyond to make it COVID safe. The one thing with traveling right now is that when returning to the States, at least from Mexico, you must present a negative COVID test within 3 days of your return flight, which my party was all able to present, which was good, right? As it would not be pleasant to have to be stuck in Cabo another week now, would it? But I must say, I enjoyed myself very much. From the Airbnb in which we had the privilege to stay at, to making multiple trips to the beach, driving an all-terrain vehicle in the desert, visiting many market squares, getting sunburnt, of course, and definitely eating a lot of delicious Mexican food. Although I still get one more week off in the comfort of my local city, there's nothing like traveling for a vacation. I look at it like a taste of retirement, as in one of the pleasures about it all is living a couple days with less responsibilities. For me, it's just more motivation to keep on building my solid foundation today, working for this as my end goal. I like to believe life should only get easier as we get older, as getting older is already hard enough. That's why I do what I do today, and planning financially for my future, so I don't have to worry about it once I'm older. But before I get into the portfolio review, and just to share or summarize a bit about my current situation, for those that are new or just as a reminder, I'm currently 25 years old, turning 26 later this year. I live with my long-term girlfriend and our 1-year-old pup. We aren't married, no plans for children anytime soon, and we rent a 1-bedroom apartment here in California. My day job is working as a registered nurse in a correctional facility, and I'm currently employed through the state of California, with the idea of working towards a pension. I still have a small student loan, but no car payment, as I currently still drive my 20-year-old beater car, my Toyota Camry, no matter how badly I want to purchase a Jeep Wrangler Rubicon or a Tesla. Major contrast of vehicles, right? I know. But currently this is my situation, and it's fortunately working out for me at this moment. I started this dividend growth portfolio on July 20th of this crazy last year of 2020. And I'm currently fortunate enough to invest $500 every single week into this dividend growth portfolio, or approximately $2,000 every month, which I understand is a rather quick pace. I've been systematic with my plan and have been fairly disciplined and able to execute on this plan so far. Not missing any week of investing and really prioritizing my investment into this portfolio. My idea is to create a snowball as big and as soon as possible and let compounding or momentum do the rest. So with this all being said, let's go ahead and make our way over to the portfolio review for this week. So here we are in the Jesse's cash flow portfolio. Today sitting currently at $20,115.68. So here we are. We've crossed the 20K mark, and it does feel good. I came up with the plan, a while ago when I first started this dividend portfolio, and I've been lucky enough to be able to execute, and I've been staying systematic and disciplined. And here we are today. So currently we have an all-time gain, or all-time return of about 28% practically, and it's a total gain, including dividends, of $2,452.88. Earned dividends is $196.75, and market gain is $2,256. And like I was saying earlier, for those that are curious, I did start this portfolio on July 20th of the year 2020. And here we are systematically over time with the progression, being able to execute. We are today at $20,115. And considering I started this portfolio in the crazy year of 2020, I wouldn't have imagined that here we are with a nice cushion in the green. It all goes to show that there really is no perfect time to invest. It's better to just invest or to just get started and be systematic and follow your game plan. This last week was actually a really great week. As you can see here, just this last week, we had a 3.37% return, which equated to $651 gain. That's more than a deposit. Like I say, I deposit $500 every week. So that definitely pushed me 1 week ahead of schedule than when I was initially anticipating crossing this mark. So thanks to this last week, and no complaints from me. So here we are on the month view, a total return of $770 with a 4% return. And like I was saying in my recent videos, there was a downtrend starting to form. But just this last week, it really catapulted us forward. So we'll see. I'm kind of curious to see if it actually will continue or what will happen. There's a lot of optimism in the air right now, with the stimulus checks, the COVID vaccines. So it's going to be interesting just to see how it all unfolds. But here, switching back to the all-time view, I'll show you guys my sectors and their percent allocation, along with the overall return of each sector, just for you guys to kind of get an idea. But the way I have my portfolio broken down is like this. I have real estate at 13%. Right now, it currently all-time has a return of 15%. Have consumer staples, which is pretty much my next biggest allocation, of 12%, and it's currently up 21.6%. Have an ETF, if you're curious, it's SPYD. That is currently 10% of my portfolio, and it's up 62%. Next up, I have utilities here, which is at 10% of my portfolio, and it's up 14.46%. Have the index fund. If I go ahead and click on it here, you can see that it's VIG. And it's 10% of the portfolio, and it's up 16.37%. I have tech. It's 10% of the portfolio, and it's up 9.73%. Next up is financials. It's 9% of the portfolio, but it's up 70.99%. I think it's my biggest net return so far, which is interesting to see. Next up here we have industrials. It's 8% of the portfolio, and it's up 35.8%. Here I have healthcare. 7% of the portfolio, and it's up 9.28%. Communications, 5% of the portfolio, and it's up 26.13%. And as we get smaller here, next up we have energy. A lot of people have their opinion on oil, but it's only 3% of my portfolio. And surprisingly enough, we're actually up 61.3%. Here we have materials. It's only 2% of the portfolio, and it's up 15%. And next up we have consumer discretionary, which is only 1% of the portfolio. It's up 2%. And I'll just show you here just for funsies. And it is McDonald's. It's the only one that I have in my consumer discretionary. If you happen to be curious though, I know I only showed you my ETF and index fund holding, but if you're curious to seeing everything else that I'm actually holding individually, as you know with M1 Finance, there's a link to sharing my pie. I'll go ahead and share that link in the description box. You can click on that and you can see everything that I'm holding. Like for example, when you click on real estate here, you can see the holdings that I have. I continually like to remind that I'm not a financial advisor, a financial planner. I'm not one to recommend stocks to buy or which ones to sell. I consider myself an average investor who did his research like everybody else. I formulated my own portfolio, based on my research, based on my risk and comfort level. And that's what I have here. But like I was saying, if you're curious, go ahead and click on that link and take a look. It'll all be there. And further still, in honor of the 20K mark, I'm going to show you guys what my portfolio is currently yielding based on M1 Finance. And I'll tell you how many holdings that I have at the moment. So currently the Jesse's Cash Flow portfolio, as you can see here, it has 51 holdings. And the current dividend yield is 2.847%. It usually hovers around this to a little higher than 3%. Preferably I'd want it closer to 3%, but 2.84% or 2.85% technically, and I'm comfortable with that. As you can see here, the expense ratio is really low, and that's how I like it, 0.01%. I don't like giving away any more money than I need to, and you might be the same way. So here we are in the activity for this last week. So we got quite a bit of action. As you can see here, on March 8th, we got paid by Southern Company, then leading on to March 9th with Johnson & Johnson, then Snap-on March 10th, Chevron also on March 10th, ExxonMobil March 10th, IBM, Snap-on, Sunoco, Chevron again, Exxon. So I don't know why exactly it splits it up, but it does. But nevertheless, we got paid quite a bit in dividends this last week. We saw quite a bit of action. And also here on March 10th, we had the deposit that we always do of $500, and we funneled this money into the portfolio. Here it shows a $7.83 snowball. So we had a pretty good snowball action this last week. Later in the week on March 12th, I got paid more in dividends. On March 12th here, we got paid by Walgreens, $3.89, Sherwin-Williams, 44 cents, and 3M, $1.67. So overall, apart from reaching the 20K mark, there was quite a bit of activity in terms of dividend payouts. And it doesn't happen every single week, but when it all happens together, it's nice. It's a nice picture to look at, especially when we're thinking long term. And just to show you here, if we go all the way to the end, and July 20th of 2020, I started this dividend portfolio with an initial investment of $650. But that's going to be it for this section here on M1 Finance. Let me take you over to an app that I use. It's called the Div Tracker. I'm not sponsored or affiliated with them by any means, but it's one that I actually paid for, and I actually enjoy using it. That way I could show you how much my portfolio is actually paying me out in terms of annual dividends and monthly dividends. So here we are again in the Jesse's Cash Flow portfolio, but this time from the Div Tracker. As you can see, we have 51 stocks here, and it's showing a total portfolio size of $20,115, and this one says 61 cents. So it's not perfect, it's not an exact reflection of my M1 Finance portfolio, but it's pretty close. And as you can see here in the composition section down below, it kind of tells you overall the percentage of allocations in my portfolio in terms of individual holdings. So like VIG and SPYD, for example, they're my largest holdings of the portfolio. And if you look, there's really no other stock that I'm holding that makes up more than about 4 to 5% of my portfolio. And that's my comfort level. I'd rather be diversified or maybe even a little over diversified than under diversified. And I know 51 stocks or 51 holdings is quite a bit in a dividend portfolio. And maybe I'll make adjustments as I go along and continue learning. But like I said, this is my comfort level. And I'm okay with this, at least right now with a 20K portfolio size. Moving on over here, you can see the annual dividend income. It currently reflects $620. That's how much in dividends I'm getting paid technically on the year basis. On a monthly basis, I'm getting paid now over $50 in dividends, which is pretty neat. And $50, to some it may not seem a lot. Maybe it's just one visit, to fill up on gas. But I'm expecting to see this grow over time, and seeing that money, that passive income come in, that's what this is all about. And I'm excited to see it grow over time. And in comparison to the $10,000 portfolio size, we're heading in the right direction. Now, like I was saying earlier, I think it was on M1 Finance, it had a 2.8% yield. Here on this div tracker, it says a 3.4% yield. So there is a little discrepancy there. I'm not exactly sure which one is the most accurate in terms of reflecting my portfolio's yield, just because it's continually changing every time I, put in a deposit and funnel in funds. But anywhere from 2.8 to 3%, I'm sure that's probably a good accurate reflection of what my portfolio is currently yielding. And here we are down here on the annual dividend income goal. Last time I had it set at $500. Now I have it set at $1,000. That's my next goal in terms of dividend payouts. So it's saying I need to invest another $10,000 or so, $11,000 to reach it. But we're going to see how it all happens. I have the drip initiated, so the compounding has taken effect. My overall goal by the end of this year for this dividend portfolio is to get to $40,000. So that's going to wrap it up for this week's video. I hope you guys enjoyed it. I enjoyed bringing in a little bit more depth to the portfolio review than normal. And I plan to do this for every time we hit a big milestone. The next milestone I anticipate hitting will be the 30K portfolio size mark, and I'm excited to get there. My goal isn't to hit a home run. My goal is to continue with the base hits. And at the end of the day, what I most care about is getting paid dividends, creating a stream of passive income. So thank you guys for watching if you made it all the way to this point. This journey won't be stopping anytime soon, so stay safe out there and take it easy. I'll enjoy my last week of vacation. Peace.